All right, guys, welcome back for another video. In today's video, I just want to follow up on a previous trading idea I posted over the weekend titled Weekly RSI EMA Position Trade, and I still believe that that's valid. If you guys didn't catch the video, I'll just go over it really quickly. Anytime the RSI on the weekly gets down to a critical level, that's going to pique my interest, but it's not necessarily getting down to that critical level that makes me a buyer. It's coming down there and then closing above the weekly EMA on the RSI. That typically marks bottoms in the market, like right here. You get that coming down the critical zone, closes above, and then rally. Sometimes it's not necessarily a macro bottom in the market, like right here. RSI comes down to the critical zone, closes above, and then you get a few weeks of rallies until you end up hitting the macro bottom. Or sometimes it is, right? Sometimes it comes down, goes to the critical zone, comes back above, closes above the RSI EMA right there, and then you get your macro bottom. Something more modest right here is like a multi-month rally. So RSI comes down in the critical zone, closes above the EMA, and then you rally up above the all-time highs. Last week's close, we actually have that distinction, right? RSI is coming down to the most oversold region it's ever been at in basically modern history, for at least in crypto, for the last 5 years. And we get that distinction, right? It's coming down to extremes, right? RSI has never been this extreme before. And that necessarily isn't a buy in itself, right? Because it can always still create new extremes, but it's when you get to that extreme level and then come back and close above the EMA that I become interested. And so we did see that close on Sunday. And, ultimately we see that close above this weekly high right here. So I marked off that weekly high. That's going to be significant because right now we see price coming down and testing that level. Generally, if this is going to serve as, a break of structure and we're going to see a rally, then you would want to see last week's high serve as a support, right? Price comes down there and you get some support there. If you see price, trade below and then later this week close the weekly below this level, that would be a bad sign. It would also line up with losing the RSI EMA, right? So the interesting thing about this indicator is that actually it marks off on the indicator itself at what price the RSI would cross down the EMA. So right here you've got RSI crossing down the EMA at 21855, which is basically where we're at right now. So basically you see price close above that weekly high. This RSI EMA is confluent with last week's weekly high. We see price coming down and testing that level. So this is, an area of interest. If we see, price react off that level and, maybe, create new highs, then the weekly stochastics are generally going to get pulled up with them. And you probably have a little bit of a base for, at the very least, a relief rally into a lower high. But, considering how volatile price moved down into this level, typically, the volatility up matches volatility down, just as the volatility down matches volatility up. That's just the nature of short covering and short squeezes. So now if we go down to the daily chart, we can see, we can kind of see this weekly level marked off right here. You can see a little more clearly how we're testing that. So maybe if I go down to a 4 hour, we can see this better. Yeah, so you have your weekly high right here. And you could probably mark off some greater swing like this, right? So we have our weekly high marked off. And essentially what we're worried about is we're worried about a weekly close below this level. Now price, today price is Tuesday, right? There's, it's Monday, Monday, July 25th. And we have FOMC week, a lot of earnings releases this week. So price could get very volatile, but within the context of this trade idea, right, we could retrace a greater degree of this greater swing, right, down from this low at 19,000 roughly. And then that's fine as long as the week ends up closing, hopefully that CME close on Friday, further confirmed by the spot close above this 21,500 level right here. If we see that, then the weekly RSI trade idea is still in play. Again, if we see a weekly close below there, it doesn't necessarily mean that that Bitcoin is doomed, you could see price just kind of go sideways and range at this level. But it does mean that that trade idea is no longer valid, and something different's happening. And we just gotta change up methodology a little bit. Now, again, the Federal Reserve is issuing their FOMC statement this Wednesday, holding their press conference. So there's definitely going to be a lot of volatility in the market. It's not really an environment to trade with a great deal of risk, at least directional risk. Because typically liquidity dries up in those phases of the market, anticipating the data release, and then when the data release comes, then it sort of kicks the door open, and the market kind of can go a little crazy following that after the central bank opens the door on price action. So if you are trading in and up to Wednesday's price, between now and Wednesday, I would it'd probably be a good idea to manage your risk. Take some risk off the table, especially if the market gives you the opportunity to do that while you're in profit, because really that's what the rest of the market's doing, right? They're sort of liquidity is drawing away from the market in anticipation of that data, and after by the end of the week on this weekly closure following that data release, we should have a clearer picture about what direction the markets are going to take, and how to position ourselves for whatever direction it goes. Again, I hope you guys like this video. If you like this content, just make sure to subscribe to the channel, and I'll catch you guys in the next one.